The basics fundamentals of any economy are buyers' demand and sellers' supply. And in the demand by buyers is almost always determined in real estate by interest rates. And so interest rates closed this week slightly up at 6.9%, still below 7, have not crossed back above 7 for weeks, well below the 8s of a few months ago. As you can see, we're in the range we've been for the last 6 months or a year or so. And play of demand, those numbers, though, it's cooling a bit. The rise in rates from 6.6 to 6.9 have definitely taken some of the wind out of the sails of the market. On the other side of the inventory question is the supply, and that's determined by the amount of inventory for properties that are for sale. And the inventory continues to be at all-time non-pandemic lows, about half of where it was before the pandemic period. Slightly higher than 2 years ago, than last year and 3 years ago, and still slightly below 2018, significantly below 2018, 2019, and slightly below last year, 2023. So inventory remains low. And as long as there's not a lot of houses for sale, you can't have that buyers collapse, sellers dropping prices to compete for the business that causes housing prices to go down. It just can't possibly happen. Now, in Los Angeles, our market has definitely softened a little bit more. The rating, I use Altos Research, great compilation of statistical data. And their rating on the market now has dropped again, second week in a row to 38. They were at 40 for a long while, 39 last week, now to 38. One of the key factors I watch is price per square foot, which is $787 is what it costs for the average square foot of a house in Los Angeles, down from $830, $823, $830 back in October. So if the price per square foot's going down, that's going to mean eventually softening desire for higher amenities. And it means the market is softening a bit. Still a bit of a seller's market, but not like it was a few months ago. Definitely the less wind behind the sails of the market today than there was before.